Good afternoon. Yeah, I'm happy new month. Still straight from my vacation because I miss you all. I just have to like do this to celebrate you for the new month. I say thanks for being there. This is for most of you who has been asking for this about how do I trade news, how you can use the AMD pattern to trade news, because it's basically on price manipulation. And the same thing what news will be doing. Yeah, so I've told you several times, now and then that if you are going to trade the news, don't trade the news like the crowd do. Don't trade the news like the masses always do. That people want to gamble the news that, oh, news is volatile. I want to, if I see candle moving up, I move up with it. If I see it going down, I will go down with it. No, you have to understand. You have to understand what moves price first, price action. You have to trade the news. If you are told you are going to trade the news in the context of the market structure. Trade the news in the context of market structure. About 90% or 95% of all the times, news usually comes in alignment with the established market structure, because it is the market maker that make the price. I told you, I repeated this all the time, and most of them, they know what the news is going to come out to be. So, but they have insiders, they have consultants, they have everything within their capacity, something before the news comes up to set the pattern. Yeah. So you have to be very careful. You have to be very careful. If you don't understand the language of market price manipulation, you better do now, so that if you are going to look at the news, or you are the one interested in trading news, always you just have to trade it according to the structure on ground. Now let's go first to this pattern I've always been telling you about. This flag or compression towards a certain impulse. Towards a certain impulse. So, like for example, this is a bullish flag, right? So an impulse. This is an impulse moving from high to low, then push higher, then start compressing within that towards the impulse. Towards the impulse. If you send it like this, what you really could look at is that this place is the previous high, right? And price moves down to break it upward. So this place now becomes what? It becomes a weak supply, or a weak high, while this place becomes a protected demand. We call it a protected demand because that is what the market makers are going to use. This becomes a POI, point of interest. That's what they are going to look at to buy in order to take off the next high. Yeah. So all this area I just a compressed supply, a compressed sellers, a weakened sellers trying to push the price. And by so doing, they are covering up this liquidity void. Yeah. So the trend line liquidity taken into POI in order to run the weak high, this weak high. Yeah, this is the weak high expected to be taken following the instructional order flow. So this now becomes a cost. This is a cost, a kind of effort bidding up here in order to run this place out of it. So that's the pattern for you. That's the pattern you must understand. Then when you talk about mitigation and impulse and mitigation, this is the impulse. This is a bullish impulse. If you want to buy into this, that means you wait for price after taking off of this previous high. Price usually mitigate into this place. If there is going to be an kind of imbalance here, there's going to be a kind of imbalance here, probably to get there and start moving higher. So this level will now become a protected demand that is used to take up this. This will be the target. Yeah. So now let's go through to So that's what you need to do. You need to understand liquidity void. And I tell you that step. Whenever a particular liquidity is being taken out, you expect the price to move to take out the opposite. Yeah. This price is fractal. Price or market structure is usually a factor in nature. Yeah, factor in nature. Like for example, you see this is an impulse, right? Which has a liquid an imbalance here, right? Now, after moving higher, price starts compressing into this imbalance. So by so doing, it try to take off this liquidity gaps created by the internal structural loads. Our price was moving higher. So after filling up the gap, it tends to go to the other side to take up this liquidity guide created by this by the internal structural highs. The as price was coming down this place. So you just want to know. So once the liquidity is taken out downward, then expect price to move to the other side to take liquidity, then move to the other below to take another liquidity, to fill up another liquidity in order to make an efficient price, because that's the equilibrium where the markets usually make a cost or effort or do the whole manipulation. Yeah. So let's go straight to like the news for today comes up for 2:30 a.m. Wednesday, 1st of June. By 2:30 a.m. you see this. See, this is the news for today. So the previous was released at 3.6%. The GDP of Australia was released at 3%. This is the currency to affect all Australian dollar against all the counterparts will be affected today, 2:30 a.m. Now, the forecast, the aggregate economists were saying that it will come up, the value will come up at 0.6%, but the actual value came up to be 0.8%, which is higher than expected. So the Australian dollar ought to be moving higher, while the counterpart currency will be declining. But it's a different. But when you get to the chart, it may not go as you think. As it may not go immediately, but because it has to fulfill, certain price action. Price must fulfill an objective that is on ground. Price must fulfill an objective that is on ground. And for example, this so this for example, this place now, this place now, you can see that's here now. This place, this is where we came in before this is 1:30 a.m. before the news. You can see that price, the buyers here under 30 minutes was like price was moving low, high, lower high, then breaking the low, move up, below another lower high, breaking the low, move up, okay, another. So the price structure is down, is bearish, low, high, lower low, lower high, lower low, then try to push upward a bit, but it could not break the external structural high. So and the external structural low, this is the structural low, external structural high, So but towards the breaking of another low here, you can see price was compressing in a downward a channel. This is the channel. You can see the high, the high coming lower than the previous one. High coming lower than the previous one. This place was the low was taken out. When the low was taken out, so we expect price to move because this is a gap here. There's a liquidity gap here. That price must fill. There's a liquidity gap. Whether news or no news, this place must be fulfilled. Must be fulfilled. That is the price action. Is the main indicator. It leads. So price must react to those areas. price must react to those areas. So after fulfilling this place, price will now move higher to take out this liquidity grab there. So exactly what we see in that bullish flag pattern here. You know, that means as price was condensing or compressing towards this demand, is a strong and demand and protected demand zone, it will be taking up the liquidity gaps there. You understand? So then later on, as it comes into the zone, that means all the gaps has been filled, all the liquidity available in the internal structural loads created by this impulse has been taken out. Price will now move to the opposite in order to fill up this gap here, and start coming down again to fill up another gap downward. That is that. So you can you now understand that price has a structure. It has a structure. Until when those structure has been filled up, it cannot do otherwise. It cannot do otherwise. So this is an impulse. This is a compression. And anytime a compression is happening like this, that means you are having a weakened sellers who are weakened, who have been weakened. You understand, to take the market lower. So as the market falls into the zone here, so this is what we call it to start moving higher. So that's what we call this place a bullish flag. This is what we call a bullish flag, or a demand compression. So you are looking to buy into this place when market come back into this. Probably if market comes into this, if this is an imbalance here, there is an imbalance here. If there is an imbalance here, for example, an imbalance before this demand zone, so that means price will likely come here, broke this place through. That means you are looking at this place. You are looking at this place as a target. This now becomes your SH. Then this now becomes a new DC. As price comes in, you take out this place, it will come over again and again to take out, to come lower, to fill up this liquidity gap and fall into this demand zone, then start moving higher. So that's how you will see it. That's how to trade flag. Or if prevention price, that by prevention there's a kind of a hidden stuff, a hidden demand base here. Price may likely come to this place, check out this then start moving higher. But there will usually be a retest of this place, of this broken resistance or broken supply, then before moving higher. Usually be like that. So yeah. So anytime you see a flag like this, have it in mind that you go to buy. But before you buy, look out for a retest, because a broken this will be retested. Yeah. So a broken this will be retested. So what is your first assignment when you come to this kind of markets before the news? Just do the normal thing. Follow your trading plan. You do the market, the directional bias first, which is the range. You get the price range that's close, the most recent price range before the news, which is this place is we mark at our price range high. Then this is the price range low. The price range low. Then market breaks through it by filling up this place, right? Breaks through it. Can you see this place? This place here. This place, this is a demand that took up this liquidity, this previous high. Yeah, that's structural high there. So it's a demand. That's why price comes into it. So if you go to maybe like higher time, you see it as an imbalance or thereabouts, or as a decision point. So we expect price now to start moving up here, because this is there's another thing here, right here. We have another supply here because of what? Because this place has been taken over. You see the huge drop. why this place was taken out. So we are expecting price to move into this place now, starting because the real market structure is still down, right? So market will still come down to fall into this this external so, but this is the internal one. This is the internal one. Yeah, that's the internal. So let's take it to 15 minutes. Let's take to 15 minutes. So you can see it in 15 minutes. So 15 minutes, clearly we have this as this in a strong demand, a protected demand zone. That is why this price retested it here. Price already retested it here. They're moving higher. I've taken a lot with this knowledge, protected demand. Yeah. That is 15 minutes. Protected demand. That's why price coming into this because of what this is strong demand zone, right? It's a strong demand zone. Like what happened here too. It's a strong demand zone. This low was responsible for taking out of this high. Then, according to that our setup, so our price come back into this place. They start moving high from this place to this place. Is a huge piece for you. So, but right now we are dealing with news first. Let's say 65 pips. 65 pips. So the same thing happened here. See it? Because this place was responsible for taking part of this low. So this place become what? This place become a protected supply. And why the reason why price move back into the zone, right? Into the zone. So you must understand the price action. Yeah, this structure. You can imagine the number of pips you will have gathered there. That's almost about 65 pips, under 65 pips. I see that under 65 pips there. So now the business of today is how do we use this? You use this information to scalp the news. How do you use this information to scalp the news? Don't be aware of all this this thing here, because in a lower time frame it's going to be a hidden base there. Yeah, so you have to be aware of that. Now let's take it lower. Let's take it lower and see if I get below this place. Yeah. Now we get this. Price is already acting on this. Price is already acting on this. This is price was already acting on this. See it? Price is already acting on this. This is so let's play it forward and see. Price move higher. Let's go to react here again. Go to react there again. Go to react, probably push lower. See it? Go to react here again, probably push lower to this place again. Right? So it will not go there because this place is acting as a barrier now. Because this is a strong supply. It took out this low, so this will become a strong supply. That base there. Because so price has tested, we drop back. So let's down this place here. This place, what you see here, this is upper wick, then with alternating lower wick, alternating this. That means we have buyers who push price upward like this, price upward, then sellers came in to push it lower. So what do you expect that place will be in the lower time frame? What do you expect that place to be? That place will be like a zigzag, like this. Price moving up and down before start moving higher. That's exactly what is there in a lower time frame. This is what we call a hidden base, a hidden demand base, a hidden demand base. Like we have here, this is exactly what happened here. Why this place puts higher into this place? Because this place, there's a hidden supply base here. Why the price still moved inside into the body of the wick to take liquidity. Yeah. It's a hidden base. You see that when we finish the news and we go to that place. So take note of this. When you see this, and this thing has never been filled up, has never been filled up. Take note. Price, we've got news. Price will still come inside and pull down. So let's see. You can see this place now. Let's mark it out. Let's mark it out. Let's mark it out. Let's mark it out. You see what I mean? Yeah. So let's do 3 minutes lower. Let's take it lower. 3 minutes. You can see it. It's forming a base. It's forming a base now. It's forming a base now. It's something like this. Something like this. It has formed a kind of engulfing there with this base, right? Yeah, it's forming a base now. So that is why this place continues to come. You see, got retested because it breaks the structure here. If you take it to another 1 minute lower, wow, you can see that. You can see that. You can see that. You can see that. So this place and this place gives another good thing. You can see moved upward, then sellers move it downward before it starts moving higher. So this place becomes a protected demand zone. This place become a protected demand zone. Could give us that a lower wick in 5 minutes. It's a strong, so that's why price will likely go to react to it. Yeah, because it's a protected demand. So you could just take the half of it, and and take half of it, and trade half of it. Yeah, that's the half. So maybe we do 30 minutes. So see, if you can still get it's okay like that. Yeah. So what is the range here now? What is the range? What is the range? What is the range? What is the range? Have almost about 4 pips. 4 pip risk. It's okay. 4 pip risk. So to the half, we take the half, right? We take the half of that. Take the half, the midpoint of the range. Before the news, you must have done this analysis before the news. So this is how to trade the news. Take the half. Yeah. So you are now going to buy at 75.24. Put up your position, your buy limit or whatever. Yeah. So you're having almost about 4 pips, 4 pip risk. So your first target will be here, because in a lower time frame, we are still getting more this in here. And you can see that. Let me take it to 1 minute, 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. You can see that we're still getting more this in here. In a lower time frame, you see it here. You can see that thing clearly now. Yeah, that supply zone very clear in the distance. Then this place too, it's a strong supply. Yeah, it's a strong supply. You can put for your this here for the first thing. First take profit, that's 30 pips or 31 pips from this place. So now this is 2:05 a.m. at 2:05 a.m. So you are ready for the news now. This is our SH. This is this liquidity grab liquidity, grab liquidity. Then move higher. This is BMS. This is SH. This is BMS. Then price move into the zone that caused the price to move into the zone. So this place becomes what? This place becomes that why this place is a strong supply because it breaks out this place, right? Move into that intermediate demand zone. Then after it moves higher back into this zone, into this place, right? Back into the zone. So we are expecting it now to do what? Start coming down because this is zone. So this place now has created another protected supply here. Another protected supply here. That protected supply here has been created. Let's please take out this low. So we're expecting price to push higher again. So price must react to those areas. See it? At what? 219. You can see that this place is being grabbed. 219. Even when it's never came in. But it's a strong POI. See it? Why? See news moving. Oh, let me cut it off again. 230. I see it. So immediately this play was taken out, coming into that higher time frame this demand. It moves up to cover up this liquidity gaps. To cover this liquidity gap here, it moves up to cover that liquidity gap after filling up the one by the thumb here. This one was taken out. Then it moves into the opposite. Move into this thing, then clear out this one, then it's not coming down. You understand? So the news will not cause this place to move down. The news will act as a trigger down for price to move down and clear out this thing, because this is another liquidity to be cleared out, and we are having that's 30 seconds or a strong demand. So that created this zone will be cleared out. So and this will move in. This is 229 at 229. Immediately we have this. Immediately we have the news is released. The news is released at 0.8%. 0.8%. You can see what happened, and then price moves shift. Can you see it? Tap into the midpoint. So your order is triggered. Immediately withdraw back because of what it has filled up this place. It has taken liquidity here, take off all the stop losses here, and moving to the opposite. You will see that this place is now another close this thing for market maker to grab. Equal highs. Yeah, equal high. So they want to grab that place now. So it becomes another decision to take. Then once they take it, they push into this place, then start coming down again. But this place is another stop. So we are expecting it to come up higher there to hit our worth. See it? It has been grabbed, price reacted back. See it? So our distance is filled. Our target of 30 pips or 31 pips is filled. So we got almost about times 8. So this is the way to trade the news. News continues to move higher. So news is going to sell into this now. Going to sell into this because, but initially, if you are the Russian type, you will have been cut off here. You will be thinking that pound is supposed to be selling against AUD because the value came up as higher than expected. You will have been cut off here, trying to want to sell into this. This is a fake price, as they push into this, you grab this, all the liquidities available here, fill up this, it then moves to the opposite. So this now becomes what? This AMD, accumulation, manipulation, then distribution happens in the opposite. Accumulation, price accumulates again, then moves into the opposite. This is manipulation of the stops available here. Manipulation of the stop available here, it moves to the opposite. Manipulation of the stop available here, it moves back inside. Then clearly the board here then moves to the opposite. So that's how the news comes. And before you knew it, because this place has been taken out, this strong demand has been taken out. It has been taken out. It has been taken out. So you expect price to do what? To come back. To fall back lower, because the liquidity, all this place has been cleared out. The liquidity here has been cleared out. And this is a higher time frame supply zone, right? A higher time frame supply zone. Wow. SH, manipulation, that's SH. Then a listen to it here. A retest, so you will have sold it to this place. Imagine there. This retest to this place. So that's how to trade the news. And the news has given you 31 pips. And before you know, if you get another deep knowledge about it, you will have begun to prepare to sell. But you must wait for what? You must wait for your confirmation. Yeah, this player has been grabbed. Then what next? See it, price starts coming down. Price starts coming down. Price starts coming down. You can see that. So it has been grabbed, then see this grab, then you move into back into this place. This place here. This is a breaker or a demand zone broken below that's going to be retested. So waiting for price to retest it. But this is strong, that's a strong supply there, right? So because this is a breaker block or demand turn supply. So whenever this place is taken out, expect a pullback into this zone. So you're going to use another decimal to want to set into here, right? So your target will be around here. Yeah. So, and the price will come in now to take, because this become a strong supply, because it was responsible for this high, was responsible for so this will become a strong high, a protected high, rather, a protected high. And price move back. Still retest. Can you say retest it? Still retest. Got retested. Start coming down. Yeah, another retest. So this place is cleared. This board is cleared. The liquidity right here is cleared. So you can use that to trade during the news, then post news after the news. So you can see that you are making another good this thing right from this place. Because this place is a strong zone. So it has been retested. It has been retested. You can trade this. It has been retested. You can trade this. So your stop loss will be above here. You can trade this, still trade this breaker with it. But the breaker will have given you, it doesn't move this here, low, high, because of what? Because this is another strong demand here. It's a strong demand here. This play was taken out. It's a strong demand here. A demand base, a kind of a rally based rally. Yeah, a price got retested it out. Move fine. But once you get to this place now, today that strongest, it will push it downward. Push it downward. So from that place to this place, we get another almost about 26, and there about 26 pips. Just 1 minute, in 1 minute scalp, you can imagine what you have scalped here out of this place. 30 something, then 26, going to 50 something, thereabouts. So that's how to trade. That's how to trade the news. Now, we'll come back to end of the other one after the news. What happens? How do you